I'm here with Ryan Albert, who runs a hedge fund out of Los Angeles, and a fairly new hedge fund started a few months ago that's been very much focused on Korean equities. And in today's discussion, we'll talk a lot about Korea, but also a little bit about his background and one specific campaign that he's currently undertaking, public campaign, I should say, in a company called Golfzon, listed in Korea. First of all, remember, a short disclaimer, none of the discussion should be taken as investment advice. It's purely for information and educational purposes. Do your own research and speak to a financial advisor before making any investment decisions. Also, as of 5th of August 2026, I do not own any of the shares we'll talk about, but Ryan owns shares in Golfzon Holdings. So thank you so much for doing this, Ryan. It's going to be super interesting to hear your views on Korea. First of all, maybe you can talk a little bit about your background. Where did you study, and what's your career looked like before starting Terton Capital?
Yeah, and first, thanks for having me on. So, a little bit about my background. I was born and raised in Newport Beach, California, a city about an hour south of Los Angeles, oldest of three children. Um, I played varsity baseball at Princeton University, studied economics there, worked in New York for a few years after graduating, started doing investment banking. A few years later, I found myself at a hybrid venture capital private equity firm and kind of had a realization that I wanted to do something outside the US. Mainly just after reading a lot of TechCrunch articles and seeing that there was a lot more going on outside the US that I could do and look at. So, natural place of interest was Latin America. I thought I could speak decent Spanish, constantly read articles about new funds and new startups being formed, and decided ultimately that I wanted to go work abroad. Um, Contacted a few venture capital funds in Mexico City, and ultimately decided that I wanted to pursue that route and moved down to Mexico City and worked for a local venture capital fund. It was a pretty awesome experience, um, and it kind of changed the trajectory of my life and my interest from that. So, as someone who basically spent most of my career and time in the US, being outside the US, you quickly learn that the banks that exist in the US, the CPG companies that exist in the US are very different in almost every single country, and the power dynamics and the business culture is even very different within countries, very different. So for me, it was something that made me realize that if you can be humble enough and you're excited enough to be outside your comfort zone, it's a true advantage to come as an outsider and be willing to learn and look at things. So that was super compelling and exciting for someone like myself. While doing venture capital work, particularly early stage venture capital work, I started seeing a lot of companies, let's say like the big companies that all the startups were trying to disrupt. And it became very apparent to me that these were really great businesses, and that I didn't think many people in the US were looking at them. And I was just more attracted in general at looking at these big publicly traded businesses where there's a lot more information out there about them. And the concept of a margin of safety, and as a baseball guy, Moneyball always made sense to me. And that's when it clicked that I wanted to focus on public equities and pivot towards international public equities. So I went to business school at Columbia Business School. I did the value investing program there. And basically since then, I've been doing public equities. Um, I first started working at Brizo Capital, run by Ben Isaac, and he was a really great PM and mentor to someone like myself. It was a global mandate, so I started turning over a lot of rocks and looking at companies in places like Mexico, Brazil, Southeast Asia, Korea, and just
Was there
starting.
an EM focus as well? I mean, at the
Yeah,
time, you were focusing on emerging
EM,
market
developed
stocks.
market, EM, developing, kind of a very broad mandate. And it was just turning over a lot of rocks and given the freedom to go travel and meet companies and really just be in a good way as picky as possible of what you want to invest into, given the mandate and the flexibility and the long-term nature of it all. So um, once you dive into enough companies in some of these markets, whether it be Mexico, Brazil, Thailand, Vietnam, Korea, you start seeing patterns and you start seeing things that you like and don't like and what seems anomalous. And for me, Asia was a part of the world that I'd never really explored, being boots on the ground. I looked at a lot of the equities, but that was always my goal, was to go and actually kind of see what it was all about. Um, Ultimately, I never got the immediate chance to do that. I had an opportunity that came up to go work at Berkshire Hathaway for Todd Combs, and ultimately, learned a lot from Todd and enjoyed my experience at Berkshire. probably formed me most in terms of how I think today through investing. Um, but ultimately,
Yeah,
sorry to cut you off. Yeah,
let's talk about that. I mean,
sure.
how did Todd Coombs, pick stocks? What did he emphasize when choosing between different ideas?
Yeah. So I think he has a really unique way of like identifying what matters in an investment case and distilling it down into its simplest form. So, and that's really hard. You have to really know a lot, almost know everything, and then be able to explain it super simply. I think that's like the ultimate, you know something very well. So, very intellectually curious about different business models, technological innovation, geographies. I don't think there's a single way that I would describe how we pick stocks. But a recurring theme and something that sticks with me is often looking at an earnings multiple on earnings a year out. So that really forces you to think through about what a fair multiple would be a few years out. And in doing that, it forces you to really assess the total addressable market and industry competition of what exists in 3 years or 5 years, because the multiple in 3 years will then reflect the future growth opportunities from there. So that actually is not really quantitative. It comes down to just doing a great deal of deep independent research and really understanding what is happening and being able to distill it into simple, actionable insights. So I'd say there's not one single way of how someone thinks, but that was a recurring theme when you'd look at anything. It's kind of what's the price you're paying and what do you think it's worth in a range a few years out. And then that kind
Were
of
you
leads you
looking at,
down different
yeah,
paths. Yeah.
what was he interested in terms of sectors and countries at the time? What was your focus?
Well, um, I would say geographies, there is no specific geography, but given size constraint, almost everything was either global focused or based in the typical countries that were able to create businesses that were large and scaled and being able to serve the world. So I'd say like US and Europe, but again, no constraint. It was more just that's naturally where the companies are. Um, Sector was wide ranging, but I think it's publicly known. A lot of financial related investments. Yeah,
Oh, talk about your current fund then. It's called Turton Capital,
Terton. Yeah, yeah,
and it's quite a recent launch, right?
yeah.
What's the investment mandate of that fund, and what's kind of how will you invest that portfolio if you haven't
Yeah.
already?
So, um, just for quick, like 15-30 seconds before I dive into that. So after Berkshire, I went back to Brazil
Sure.
and I moved out to Asia, and that's kind of what ultimately influenced my strategy of what I'm doing today. Um, I got to spend time in a variety of countries, and ultimately, saw that there was an abundance of cheap stocks in almost any single market, particularly Southeast Asia, Korea, and it then boils down to why are they cheap and how do they get fixed, and what can you do about it when there's if you want to be an engaged shareholder. And came away thinking that it's really really tough to do that in markets where there's no forcing mechanism to influence or to change these fixable, call it overhangs, whatever it might be. So I wanted to start my own fund, really focusing, like being very laser focused on the markets that I thought where engagement was possible, where there's an open door already for engagement to work. So I do bottom up fundamental equities, global focus, but I might mainly look at Asia Pacific. And within that, I want to target companies where I think there's a fixable overhang, whether that's, let's call it, lazy balance sheet, um, poor governance, um, suboptimal capital allocation, let's just call it poor resource management. You name it, things that can be changed, but you obviously can't really change business models. So I don't have to be the one always changing it. Sometimes the company changes itself, but ultimately identifying what are these fixable, um, I don't want to call them issues, but just like these blocking items, and clearly focusing on the markets where blocking items can be unblocked because the regulatory framework is changing and constantly allowing you to do that as a shareholder or putting pressure to unblock is a great place to start looking. So for me, I'm laser focused on the markets that I think are in these early stages of corporate governance reform cycles because it takes a long time for other investors to pick up on that. And if you're able to be nimble and identify that, you can be there on the ground level. So I describe the mandate simply as global, but a focus on Asia because the markets are deep. Markets where you can actually go in and, as an engaged shareholder, uh, help with unlocking, let's call it like fixable issues. And
That's right.
potentially companies can also do it themselves because they're getting pressure. So that's basically the mandate.
Yeah, in Southeast Asia, it often takes very long to flows to come back, and these are flow-driven markets, and you can never
Yes.
quite tell when they're going to turn and they're going to come
Yes.
popular again. So it sounds like you're then interested in Korea and Japan, or how do you see the opportunity set? Is that really your focus right now because of the cheapness of the markets and the reforms that are taking place, or where do
Yeah.
you otherwise see the most opportunities?
I by far see the most opportunities in Korea today. Um, there's opportunities in many markets, but given what I'm focused on, I see Korea being the most exciting market globally. For what I want to do. Early stages of corporate governance reform cycle. I think a big supply demand imbalance between how many companies there are that need to go through changes like this and how many people are looking at it, um, and also where we are in this cycle. So that's where I see opportunity today. Of course, there's opportunity probably in Southeast Asia, right? You can easily look at some of the markets like Indonesia and see that stocks are bottomed out. But ultimately, for what I'm trying to do and how I appraise companies and how I want to execute, Korea fits the bill perfectly. I do think though that other markets will have to let's I don't want to use the term value up because it's kind of cliche, but other markets will have to go through value up strategies themselves over time if they want to attract, let's call it big Western capital. You've seen that work in Japan. I think that will happen in Korea, and I think other nations will have to go through that. That's just my personal, I would call it, thesis on where markets will evolve.
So people usually talk about the career discounts. I mean, that's been talked about
Yeah,
for decades now,
yeah,
and they've been trading at book more or less for the longest of time.
yeah,
I remember when people were pitching these preference shares or non-voting common shares back in
yeah.
2013, 14, and it was just like no catalysts. People were hoping for some revaluation, but I think a lot of people got disillusioned eventually and exited. So what do you think was the cause of the Korea discount? Like what were the like top three reasons, for
Yeah,
example, for the discount?
yeah. I mean, clearly when you look at like a business that, I don't know, trades widgets or like makes food and sells it locally and abroad, and you look at another company in the US or Europe does the same thing, and the multiples are like 5 times different. Like clearly something is like there's some the market's telling you something. Many companies that cross shareholdings, opco holds co structure inherently means that the owners can control assets with low economic ownership. Minorities can't actually touch the underlying assets underneath it all. So that for me was the source of this Korea discount, was the simple fact that you really don't know how to underwrite future economic returns as a shareholder. Um, I think that's changing, albeit it will take, it won't change quickly. But I do think we are entering a phase now, at least with the commercial act changes over the last year, that there's a good probability that this will continue to change.
I mean, there's been a lot going on in terms of the reforms. Um,
Yeah.
for example, just recently, mandatory treasury share cancellations, but also lower dividend
Hmm.
taxes, temporary, I suppose. There's talking
Yeah.
about inheritance taxes being based on not on market values, but the sub zero point 0.8 times book value. These will
Yeah.
be valued at book instead, to kind of remove the incentives to push down the share price. So these are just some of the changes that have taken place. But what do you think is going to matter the most, um, to actually get share prices up and perform returns for minorities?
Definitely inheritance taxes. That's the root of everything. At least that's my perception. Um, Korea is one of the highest inheritance taxes in the world. I think upwards of 50%. Um, there's little incentive to raise share prices when there's a potential succession, right? So, because the inheritance or gifting tax is based off of market value, I think in July, um, where it would basically put a like a I think like a floor of 0.8 times book value. Um, so that would be really significant. Like that would be by far the most significant, but it's also a politically sensitive topic. So not exactly sure when that will pass or how it will pass. But that is by far the root cause of a lot of decision making. So that, I think, economically speaking, will be the biggest driver of shareholder returns going forward if that were ever to pass or be changed. But besides that, the 3% rule is definitely the most powerful tool that shareholders have today.
Is
Starting
that the
September, yeah, sorry, yeah,
you're talking about the voting for members of the audit committee?
yeah, that's correct. So starting September 10th, if I'm not mistaken, two audit committee seats um, for companies that have audit committees. Many companies have statutory auditors because you don't need to have an audit committee until you reach 2 trillion won of assets, but many companies elect to have audit committees. But you don't need one. So let's just say an audit committee. This is only talking about audit committee, but this rule also applies for the statutory auditor. But for the audit committee, starting September 10th, minorities can fill two board seats. Basically, they can separately propose the two board members and elect those two board members with the 3% rule. And for your audience that doesn't know the 3% rule, it's basically that when electing a audit committee member, which is also part of the board, the controlling or insider block and all the related parties, their ownership their voting power is capped at 3%, even if their economic ownership is a lot higher. So if you own 3% and the controlling family and related parties own 50%, for electing this audit committee member, you both have 3%. So that's a pretty powerful tool to get board members elected if you're a minority shareholder. Again, that doesn't really can't really control what a controlling owner does with a audit committee seat or a board member seat, but clearly gives you significant power in relation to inspecting books, reviewing transactions, maybe shaping guiding strategy to some degree if you can integrate that way. So that is by far the biggest tool that any single engaged shareholder will have going forward.
What about the 2025 reform that required all directors to look after all shareholders' interest in or take their interest into account rather than the company itself? Do you
Yeah.
think that's going to have teeth? Because I'm not sure exactly what the consequences could be. Could there be
Yeah.
criminal charges for the directors or not? Do you have any insights
Yeah.
there?
I You're completely correct. I haven't seen myself let's say distinct cases of how this goes punished. I think at this upcoming AGM season in 2027 and going forward with cumulative voting now and the 3% rule and all those changes, I think we will start to see more cases of decisions being made at the AGM or other decisions being made and potential litigation if boards are found to not be, let's say, acting in the best interest of all shareholders. But you're correct. It was a big rule change. It clearly puts board members under the microscope and it gives them the freedom to dissent, particularly independent board members. But we will see. I haven't seen a precedent case yet of this is what it looks like when someone is not acting in the best interest of all shareholders.
What about the narrative that, I hear it a lot. Investors talking about how Korea is the next Japan, and they see the
Yeah,
parallels between Japan and Korea, and they want to be early on the train of reforms. But obviously, Korea is quite a different market with many
yeah,
family-owned companies. You have holding companies are legal. I mean, they're legal now in Japan as well, but there aren't as many. There's more
yeah.
dispersed, ownership, and activism has been easy for that reason. I don't know exactly how easy it is to influence a family-owned company in Korea, but do you think is that perhaps a naive view, or what would you say to that to the people who say that Korea is the next shareholder form? Uh, you
I
know,
think Japan is the best parallel for sure. It clearly shows what when almost no one wants something to change, how things can start changing. But the markets are completely different, and I think how the companies are structured are inherently very different too. So um, most Korean companies are run by a controlling family that can own anywhere from 20 to 30 to 50% of that business. They've owned it for many generations, and um, it's a lot different than when there's professional management and an open register. So enacting change and pressuring, let's just call it management that didn't create the business and maybe doesn't have the same economic interest as a family to do the right thing, to sell the business, to have private equity come in and buy the business is completely different when you're trying to influence what a family and what their livelihood, like what they're all about and what defines them. So I think that is just makes it way different. But like the way that you engage with companies and how you have to convince them to listen to you constructively at first is very different. Um, so yeah,
Can pressure from KRX, creating exchange, can that help in your campaigns as well?
um, it could. I don't even want to say that, it's like running campaigns. It's more
Sure.
for some investments, don't even need to do anything. The company is really making the changes themselves. Maybe you engage privately first, and then we can talk about Golfzone. That's public. Um, but I think the KRX could clearly be a great forcing function. They could be influential. I know the Japanese exchange has been quite influential. I still think we're in the early innings and early days of how this all forms and how it and who puts the pressure. But I do think there's a role for the KRX going forward, of course.
Yeah, I've read through, a lot of these value up plans, and many of them seem to be a little bit toothless. Like it's hard to see exactly what change is going to happen. It seems like it's
Yeah.
almost ticking off a box and then leaving it at that. Whereas in Japan, maybe there was a lot more shaming, and you feel a
Hmm.
lot more pressured to uh, get your, book value up or price book up to one, um, or face, maybe consequences like delistings,
Yeah.
um, or yeah, demotion. But talk about your screening process, whether in Korea or elsewhere. Like
Yeah.
you seem to go through like every single stock almost, which is almost seems impossible because there are 2,000 stocks plus in Korea. So how do you do it, and what are you looking for?
Yeah. I uh I don't really do any screening, to be honest. I legitimately go through like every single company. So just A to Z. And what I usually do is I'll look at last quarterly, the last annual, because they sometimes contain different information. And just to see what a company is all about. Um,
Do you have a
I'll
stack of
read.
papers like Todd Coombs, like 500 pages, and just read through them
No,
day after day?
no, I'm all digital, so
Cool. All right.
I have it saved in a folder, and I'll also go and look at just some recent news. I'll peruse the website, and I start picking up on different things when I do all of this, right? Like you start seeing who's disclosing what. Uh, do they even have presentations? Do they even have a website that works? Do they have a lot of news articles? Do they not have a lot of news articles about them? And with that, you start forming a view of, let's call it like force ranking, where something is exciting to you and where you want to spend more time. Um, so you find hidden assets when you go through this, um, underappreciated aspects to businesses. So for me, it's not really, hey, I go on Bloomberg and I download all the companies and rank price to book. It's literally going A to Z. And when I'm not working on something actively, I'm ripping through more companies. It's just kind of I'm an addict to this. I really love it. I love learning about businesses. I like seeing how things change and seeing the subtle ways that you can get like your spidey sense of where there's opportunity. So that's kind of how I go about it. And then I read a lot of news, and I like to keep myself honest and look at a lot of businesses in other parts of the world too. Just because if there's value to be found in other markets with very similar businesses to something you're looking at, maybe what your core business is, doesn't mean that you shouldn't invest into it, but it's not really that unique at the end of the day. So I like this like uniqueness factor as well. Whether it's the business model, the valuation, um, like the setup of the fixable issues. So I'm constantly thinking of how to force rank where the companies are and how to like spend my time looking at them.
Do you always, engage with management teams, or is that a no? Or does that occur in special situations where you see that they need a push, to unlock the value of the company?
I think it just comes naturally in situations. Sometimes you don't even ever have to do anything. I think when you're looking at companies for this fixing, or call it like these like fixable issues, it's you can see quantitatively also shareholder shareholder returns changing, how the business is run. Sometimes you see these things, and all you need just is one meeting with the company to understand them and talk with them a little bit, or maybe you don't even need that. But clearly, when there's companies that are reluctant to change, um, and you need to start building a rapport, it really helps to speak to the key decision makers or try to get that message across in a really friendly way.
Cool. One question here that I wanted to ask,
Sure.
personally, because obviously I agree with you that many of the stocks in Korea that are cheap because of inheritance tax issues.
Hmm.
It's almost uncanny how often I find that to be the case.
Hmm.
So how would you deal with that? Do you wait? Do you think that the ideal situation is to wait until a gift has been made, or the passing of a founder, to get that out of the way? The setting of the amount of the inheritance tax, and then you buy. And if so, how do you track that? Can you track that through filings, or through alerts somehow?
Yeah, I mean, I think there's clearly catalysts. That's kind of what we're all talking about here. Um, you have to file that in Korea, and there's news obviously regarding that. People pick up on it, so you can screen it pretty easily, or you can get notified of that pretty easily. But I don't think it pays to wait for that. I mean, that's clearly a pivotal moment when you see something change. But I do think that going forward, um, what will be interesting also is if companies are not, let's say, maximizing. There's a difference between maximizing shareholder value and just doing enough. So, and how that plays for the fiduciary duty and the duty to shareholders. So, I do think there's room to push for change and push for better shareholder returns. Clearly, there's going to be a counterforce if there's succession happening. So I don't think that means that you don't need to focus on those companies, because it almost seems like then, per what you're saying, the only times that a company is potentially investable is right after someone gifts. Um, that's not a bad strategy. It's just that's very catalyst driven. So I think there's a middle ground here, because obviously a there's taxes, but if stocks go up a lot, taxes on a stock that goes up a lot after taxes is probably a lot more than what it was if it didn't go up. So I think that's just as in the relationship that you build with companies, and goes back to this 3% rule. If you really do think that, um, let's say, the behavior of like the corporate behavior is not maximizing the corporate value, I do think shareholders deserve to push for change. So I think it just will come down.
What about the holdco versus opco issue? I mean, a lot of times you have these structures, right?
Yeah.
Pyramids, or just opco holdco structures.
Mhm.
Do you prefer to invest in the holdcos, generally speaking, because you're closer to the founder? You're more aligned.
Not always. Um, it depends on where the value sits. Um, I'm looking at a company right now that's an opco holdco structure. This is not Golfzon; it's a separate one that I won't talk about. But almost all the value is held at the opco level. All the cash is at the opco level. Um, so the opco level is far more attractive. There's another situation where the holdco level is way more attractive, because the holdco has a few other privately held businesses that are not listed, and those are valuable, and the cash is actually hoarded at the holdco level. So, where that like look through economic ownership is the greatest will be where that
Sure.
it's called like tension point is.
Yeah. Okay. Okay. Let's jump into Golfzone then. I mean, this
Sure.
company is highly successful. I mean, it's a holding company in the
Yeah.
group, but
Yeah.
there is the operating company operates golf simulators, but the holding company is a bit different. I
There's
mean,
nothing to
and
do with
that's
it.
just
Yeah.
part of what they own. But can you tell
Exactly.
us, exactly what assets do they own, and
Yeah.
and we can take it from there.
So I'll go through just the major assets, like the main assets. So funny enough, Golfzon Holdings really like its ownership of the golf simulator business under Golfzone company is a minuscule part of its value. Um, its two main value drivers are a 31.58% stake in Golfzon County, which is the largest golf course operator in Korea. The other partner is MBK Partners, the largest private equity fund in Korea. So that's one of the two main value drivers. The other value driver is ownership of valuable golf courses, and some other related like headquarters and buildings. So those make up almost a combined 1 trillion won of assets when you think about what fair value is. And this is not fair value that I'm creating. It's all media reported fair value, which is why I was excited about this opportunity. You have Golfzone County, which just as of early June, the media reported that it's in an active sale process and they're trying to solicit bids for an enterprise value of 2 trillion won. So in Korea, most people don't realize, but on DART, which is the website that you can look at disclosures, many private businesses are listed. So oftentimes, publicly traded companies and their large subsidiaries that are privately held will actually have their own filings. So you can go into the filing and see and subtract out net debt and see that the roughly 32% ownership stake of Golfzon Holdings in Golfzon County is worth close to 400 billion Korean won. Then you look at their real estate. At the 2025 annual report, they also disclose the appraised value. And the appraised value was around like 567 billion Korean won, which is significantly above what book value is. So you have just two very easy to understand assets that combined have around 1 trillion won of, let's call it fair value. Those are by far the biggest drivers in the business.
Interesting. And what is taking place right now, and why do you think
Yeah.
it's taking place right now? I'm talking about the privatization, of course, but also the sale of, I think, Golfzon County.
Golfzone,
If I'm not
yeah.
mistaken.
So
Yeah.
Golfzone County, um, it needs to be sold. Um, so one is it's timely. And then two, your other question was about this transaction, correct? Just like the timing of the transaction.
Yep.
So um, I'm not going to speculate on why the timing occurred, but stock price was at I don't want to say an all-time low, but at a very depressed level. Um, the Golfzone County is in an active sale process, and then you have a take private offer that was lobbed in from the controlling shareholder vehicle on June 29th. So the vehicle related to the controlling shareholders launched a tender bid for the minority shares, um, which is technically a private transaction on June 29th. So they bid for 6,700 Korean, not bid, they offered 6,700 Korean won per share. So actually, what's on the balance sheet was a little north of 19,000 Korean won per share. I think fair value is significantly above that just by doing some basic math on very easy to appraise assets. A controlling shareholder vehicle that made an offer to the minorities in a business that it basically helped to influence a lot of the decisions that came out about that business, making a bid to take it private at 0.35 times book value. So that's kind of the situation that happened on June 29th.
Does MBK Partners, do they have the ability to push through the sale of Golfzon County? Is it going to happen? I feel like they're almost doing these transactions, in anticipation of a sale process of before that's realized. How did they justify the need for this transaction?
Um, they, in their filings, justified it by um, one was the opco holdco structure, and kind of the diminished liquidity based on that. Another reason was the diversification efforts of the company. So those were two of the reasons that they said would were reasons why the company should be delisted, and it'd be
Okay.
better if it was not on the stock market. So
I- is there a risk that there'll be if they get I think if they get 95% of the shares, they'll be able to squeeze out the remaining minorities. Uh, is there a risk that you end up with a delisted shell if they don't reach that level? Or what are the risks here? I suppose it's already too late. The tender offer ends today, but just curious. What are the
yeah, I mean,
risks? Yeah.
so I mean, I there
Hmm.
I don't know how to answer if there's a risk here.
Yeah. All right.
Yeah,
What about? I mean, okay. So you sent out the open letter.
yeah.
I think Yonhap or some Korean news agency picked it up, and it seems like it was you got some publicity there. What exactly did you say in the open letter, and how did they respond to it?
Yeah, so I sent the open letter out on July 22nd, and I asked for the company to respond by July 27th. Um, and there was no response. Yeah, it was picked up by a variety of media outlets. There was some good traction initially, and the media receptivity was quite strong. Just to go over the open letter a little bit, I highlighted a variety of things. I won't go through the laundry list of things that I highlighted, but I'd say the most important items were focusing on a couple things. One was there's a Ministry of Justice guideline that came out in February that identifies the steps that a board should take if it was in the position that basically what Golfzon Holdings board was in. And that is to convene promptly, actively consider a statement of opinion under Article 138, which addresses the fairness of the price and the structure, form a special committee independent of the controlling shareholder, commission a valuation from an independent outside expert, and then carefully review the follow-on price. And none of that occurred. So I was basically asking them to do that. And that would come in the form of a publish a reasoned opinion, disclose to shareholders what they know about the Golfzon County sale process, and then confirm that any action to acquire remaining shares will not happen below 6,700. On July 27th, no response. We filed a petition with the regulators on July 29th. On DART, it came out that there was a prior notice of a disclosure violation. So then on August 3rd, on Monday, the company sent out a clarification statement. And that's where they clarified the point that I said they would look or make their best effort to acquire at 6,700. But then they also found the tender to be at a fair price using some of the parts in DCF valuations, but then they didn't really provide any backup information on the assumptions, the asset value, the discount rate, or anything like that. So, and this is just 2 days before the tender offer is when they finally made their opinion, and 35 days after the initial tender offer decision. So,
What do you think is going to be the outcome for them? I mean, it's going to be a public backlash somehow, or um, yeah, it's just going to go
uh,
through the transaction and then that's it.
yeah, we'll see what happens. They have to count you know, the results of the tender offer,
Mhm.
and we'll see after that what happens. I'm keeping all legal options open that are allowed in Korea, and I truly believe in all these governance reforms, and believe that minorities deserve to have their interests upheld and best practices should be upheld. And the thing that I keep on coming back to is if we never raised this issue, it would have gone unnoticed. So, um,
Absolutely. I mean, I had no idea it was that valuable, the holding company. I've seen write-ups before on the operating company, but I had
Yeah.
no idea it was so much bigger in terms of their ownership of golf courses.
I think it's important to make sure that controlling shareholders don't put their interests before minority shareholders. And I really do think in Korea, given there were basically almost two pillars to Kospi growth, right? One was governance reform. The other was just the strong base of companies that the country had that exported and serviced the world, right? With many of them being semiconductor companies. I think in the mania, this focus on the governance pillar, I wouldn't say got lost, was maybe lost under all the media coverage and the focus. So I think this is really important to focus on. And it's kind of, this is the pillar where sustainable growth is going to come from. It's hard to have sustainable growth comes from inherently cyclical, albeit very good companies. So I feel very strongly about this, and we'll see what the outcome is.
Cool. So what's next for you then? I mean, in terms of looking for new ideas and Turton Capital, what's your focus right now?
We own a variety of companies in Korea. I'm looking at a few others as we speak. The focus is just on identifying, great setups and good businesses and businesses that are going through these big changes that I mentioned earlier, and the ones that aren't starting to engage and think about the best path to engaging, and ultimately doing everything in the interests of LPs and making sure that their capital is safe and compounds. So that's really it right now for us, and trying to keep on going and do the right thing.
Cool. Anything that you think I should have asked but did not?
No, I think these were great questions, and um, everyone can follow along to what's happened at Golfzon. Um, I'll probably make another X post soon with all the links. But
Sure.
I think just
What's
really
your handle?
understanding this, and I think
Yeah, sorry.
if you own stocks in Korean companies, really being, I don't want to use the term aware, but thinking through the possibility of take privates and understanding what rights you have. And I think if you are invested in any company in Korea, that you should always, or even not Korea, anywhere in the world, these are important issues that you should think about. Because you never know when a tender offer might pop up. Or so, um, no, I think we touched on basically everything.
Sure. If people wanted to reach out to you, where can they find you?
They could find me on our website, www.tartoncapital.com. They can reach me at ralbert@tartoncapital.com. You have my X account. I think it's like Turton_capital. So those are three
Yeah,
ways. I won't hand out my personal phone number, but you can email me and ask for it. So that's where everyone can find me.
cool. Awesome. I'll put a link to your Twitter handle, and I guess that's the easiest way to reach out to you. But thank you so much for doing this, Ryan, and
Yeah.
let's keep in touch.
Thank you so much. And you're doing great work and highlighting great businesses, and you are a must follow. So thank you.
Thank you so much.